Welcome all. Come report live. Lance Sexton, Chuck Evans. We saw the two of you in Washington, D.C. It's been a whirlwind week. We have a lot of stuff to talk about. Let's get into it. First of all, we'd love your questions. We got a ton of questions this week. You all know about the certificates. Download those and file those away as evidence of your training. PDF file. Chuck's becoming a regular. We're going to see Chuck. Chuck, I believe you and I are going to be live next week from Rancho Mirage.
Outside of Palm Springs, California at America West. Looking forward to it, Bob.
Hey, if you're going to be in America West, please stop by. We always love to do interviews, love to talk to you. Please stop by. Anniversary of D-Day today, since we were just there. I talked about it last week. It's very touching and very, it's a nice time to reflect. This is Chris Hearn, president of Fountainhead, and his son. Hey, congratulations, Lance. You took home some hardware. These are our annual industry awards. This is Specialized Information Publishers Association. Lance came for lunch. And Lance, third place again. Not, but it's an award. You got a plaque, and congratulations, Lance. Good for you.
Hey, we're going to get there, guys. Next year is the first place.
And we got second place for Best Awards Program Marketing for our Coleman SBA Business Development Officer of the Year Summit. So that's nice when your peers recognize you. This is where we were on Monday. That's Chuck Evans there. And Don Thompson from Live Oak Bank, Eddie Tuvin from City First, a CDFI, and the gentleman in the back, you've seen him before, that's John Riosti. We're going to talk about what we talked about with the Senate and the subsidy. It was, Chuck, it was a very informative and a good experience for all of us.
Absolutely, it was. Thank you.
And this is, the bottom line is this, that in the black box that OMB comes up with, they say we need $99 million. Now, I'm going through the numbers, and I'm going to publish it next week. In fact, Chuck, I'll have it for America West. But my numbers are showing over the last 5 years, the program has returned billions of dollars above and beyond the fees than SBA is paying for these guaranteed purchases. And the bottom line is they're looking for solutions, and Chuck, what they're saying is 500,000 less. We're not going to raise the fees. In fact, we're going to reduce fees on veterans because we're going to bump up SBA Express, but we may have to have a solution to raise the guarantee fee. Chuck, what was your takeaway from that presentation with the Senate?
Well, I noticed, and certainly Nagel's against that, and a lot of people in the industry, but they are thinking about a temporary solution. So this is going to negatively impact the industry, and we have to come up with something. They're asking for solutions. That was the common theme with the two people that we were met with.
Well, I'm going to go back to my reporting because we went through this 15 years ago, 2004, 2003, and I believe the solution at that time was Congress just did an act of Congress, said we're going to ignore this, and we're not going to do it. So I'm going to go back and pull up on how that was resolved back then. But it is an issue. I'm still positive it will be fixed. I'm still optimistic it'll be fixed without two. Here's the deal. We met both with the Republicans and the Democrats. The Democrats are absolutely adamant about not raising fees. They're saying they're high enough as it is. We're not going to do it. And they're also adamant about keeping the program open. So that's the goal. The Republicans are on board with that. The question is, how do we get there with the black box of O&B and the calculations, Chuck?
And that's the difficult question, and they didn't have an answer at the time. So it should be interesting the next couple of months.
Well, my general perspective, Bob, if you look at the 2020 scenario where they raise fees on every loan over $500,000, you may not see fewer units because you'll still see small deals done, but you'll see smaller dollar volumes.
And by the way, when they're talking about raising fees, it's not onerous. They're talking about a quarter of a point, 25 basis points, which on a larger loan, obviously with the 70% guarantee, it's closer to 20 basis points overall. Yeah, it's not optimal. But also, Chuck, I don't think, well, we don't want to go there, but if that's a temporary solution, I think the industry will buy off on it.
Yeah. Oh, and asking the small business applicant to pay increased fees when you're adding in SBA salaries as part of that. I think that's an issue as well.
I mean, there's, and also John Riosty of American Banker, he said it's very interesting that this was being pushed without an administrator. And so we will have a new administrator, and they'll be on there. And anyway, it's fascinating. I'm not an alarmist on this. It'll be resolved. For those of you who love following making of the sausage, this is what's happening. Anyway, let's go into let's move on. Let's go to the polls, Joseph. And by the way, Joseph is in, I don't know if you read the paper this morning. He was also flying to LA, but he got diverted to Denver. So he's calling and he's in Denver. I don't know how that happens. But in honor of D-Day, let's talk about what's going on with veterans and Main Street. Veterans own what percentage of U.S. small businesses?
Bob, Chuck knows I talk about this all the time. I think there's a great opportunity for our participant lenders to beef up their SBA lending by taking advantage of the Veterans Advantage Loan Program, where there's no guarantee fee on express loans up to $350.
And of course, Lance, you're off script because that's my next slide.
Oh, I'm sorry.
Joseph, go back to the numbers. You're correct. 7.5% of all small businesses are owned by veterans. That's a very high number. And I do not know this. I'll throw this out to you. I'm curious as to what percentage of the U.S. population are veterans and how those numbers correlate. Lance and Chuck, do you know that?
No, I don't.
I'm not aware, Bob.
Yeah, I'm just curious if there's more. My gut feel tells me more veterans become small business owners as a cohort of the population. And let's go to Lance's reveal. SBA, go back, Joseph, go back. What is there, a lag between us and Denver? I don't understand what's going on. And these, just to go over the fees, these are the fees for traditional 7A. There's no guarantee fee for up to 125 loans, and then the fees do ramp up. And as for express loans, under the Veteran Express, there is no guarantee fee. And remember, part of all this sausage making is SBA wants to increase that express to $1 million, which I'm a fan of. I think a 50-50 split on that up to $1 million. And Chuck, how fast does your shop fund these express loans?
Well, this is something we can do very quickly because the lender does most of the work. We're helping with a post-closing review. It's the lender's documents. It's the lender's credit policy. So it's an easier program to get into and get involved.
And remember, there's a different level of review on the guaranteed purchase on these express loans than on traditional 7A. I'm not advocating cut corners. I'm just saying it is what it is.
Well, the express purchases all go to Little Rock and Fresno, and the PDK is not as extensive. It's not saying that you can violate SOP rules, but it is a little less intensive than a normal 7A.
We want to be very clear. We're not saying cut corners on these loans. We're saying that there's a different level of oversight. Is that a fair statement, Lance?
I think it's a fair. I think it's a fair statement in that there's less documentation that you have to present on an express purchase package, although it's similar, but it's a little briefer than the 7A PDK.
Yeah, we still need to have eligible loans and follow the rules, and we need.
Well, quite frankly, Bob, it's not just the express program. It's any loan under $350,000 uses the express PDK.
Now, this is an interesting poll question that I came up with. Do you support SBA 7A fee waivers for veterans? And I will, let's get the answers, and then I will elaborate why I'm asking this question.
My hope on this one, Bob, is that if they increase the express program, that the fee waiver goes with it.
I'm with the crowd on this. I just want everyone to understand that because we do waive these fees, it negatively impacts the other fees on the other programs. So I have no issue with the 95% of you, but I want us to be clear. This isn't, it's a zero-sum game. So if we waive fees for veterans, then it has to be made up by other fees.
Somebody else, yeah. Yeah, I think it's part of the challenge, but it's certainly, participant lenders are always looking for a vertical market to operate in. Veteran loans could be one of those markets.
Yeah, so the only reason asking this question is just to let everyone understand, okay, we're not going to pay, we're going to waive the fees here, but we got to get it from somewhere else. That's the only reason for bringing this up. And I want everyone
All right, Bob.
Go ahead, Charlie.
Bob, question for you. If we waive the fees for the veterans at the expense of the other borrowers, is that a prudent thing to do?
I don't have a problem with that.
Okay.
In terms of, I think these are people that have served our country at very low pay, and I don't have an issue with them receiving that benefit, just as we're all taxpayers and we have benefit certain segments of society. And these ladies and gentlemen, horrible hours, tough, when you ever carry a gun, that's a tough job. And we all pay taxes, and if our benefit is for that, so be it. But I just want everyone to understand that what's happening. That's the whole point. Final full question. And this is what we were talking about, assuming that the temporary fix is the 0.25%. And by the way, we don't know if that's the number or not. That was thrown out. But it's not 1 or 2 full points, 100 basis points. They're thinking about 25%. And we'll be talking about this. What do you think? Would you support that to keep it? That's what I figured, guys.
Well, I think that everybody would rather have a 25 basis point increase as opposed to having the program shut down.
Well, and I'm one of those. I was going to put. No, I don't want that, and I want them to come up with a solution, which we would all say, yeah, but we don't know what the solution is. Yeah. So be clear, none of us are advocating that. If I had to choose on this, on the limited knowledge that I have, I would go yes as well. But, we're starting the discussion. That's the point. Hey, let's get into a bunch of questions. Lance, take it away.
Well, the question from Tim, a bank purchased an SBA portfolio, and a number of the loans were to hotels, and they were doing 2 loans per borrower, both loans in the $2 million range. And the suspicion was they were doing this to maximize the premium on secondary market sale. What are the problems with this? Well, first problem.
Just I want to clarify, this is the same project. So $4 million project, and he split it up in 2 loans. Go ahead.
Well, let's start with the first thing. If you as a participant bank are buying another bank's portfolio, a strong file review by a qualified source like Chuck's organization, Capital Growth Solutions, and there are others who do it as well, but getting a strong file review of that SBA portfolio is critical in identifying potential problems and exceptions and getting them taken care of. You need to have a good, sound understanding of what you're acquiring. That's step 1. Step 2, SBA scrutinizes certain types of loans more harshly than they do others. Well, we've got 2 categories here. We've got hotels. In SBA, the Office of Credit Risk Management, the Inspector General, there have been report after report after report of problems in hotel lending. The other thing is, if you look at your peers review, one of the categories of risk is the number of loans that you have over $2 million. SBA is going to look at those. If they do a offsite or onsite review, and I know last week we talked about review costs, but if they do an onsite or offsite review, you can almost guarantee they're going to look at the loans of $2 million or more. So you've got a perfect scenario that SBA is going to look very hard at these loans in a review process, or if you have a default and ask for a guaranteed purchase, they're going to look real hard at these. The other issue, Bob, is the underwriting. And Chuck and I talked about this a little bit. The underwriting, if you're splitting a loan up in half, say you're doing the real estate on one loan, FF&E, and other items on the other loan, you're going to have to make sure you underwrite it with a pari passu collateral position. It is going to be critical that you do this properly, or you're going to get in trouble if there is a default and you request a purchase. My recommendation on this is to, I would not recommend doing 2 loans for the same project. Chuck and I both, right before we got on the show, we were talking about one of the key objectives in the SOP is for you to do what's best for the small business borrower. I don't see any advantage to a small business borrower in having 2 loans, 2 closings, 2 sets of closing costs. So, I have a lot of challenges with this. It wouldn't matter what industry it is, but because it's the hotel industry, I specifically have a challenge. And another thing I want to throw out, and then I'll be quiet. If you're doing hotel lending, make sure you're asking the questions about affiliate businesses and diving deep and asking for information to determine how many affiliate businesses are related to the borrower that you're working with. But long rambling, but a short answer, I would be real concerned about doing 2 loans on the same project in the hotel industry just for the purpose of maximizing your secondary market premium.
Yeah, I don't think it's permitted. And some people, if you ask some people, it's a condition of a repair or denial. I think that's a strong position, but certainly it's not permitted, and it's not best practices. But it goes back, Lance, to what you said before, being transparent when you have OCRM reviews and fessing up to things like this, looking at other things that you can fix after you've had that third-party reviews. So these are all important facts that you brought up earlier.
Lance, we have a question from Brad on who's signing the 159. Do we pay a referral fee? Do we need to have that broker sign it?
Yeah, well, first of all, in my response, it depends on who's paying the broker. The 159 is for fees that the borrower is paying. If the broker's fee is coming from the borrower, then the broker will sign the agent box. The bank will sign the SBA lender certification, and the borrower will sign. But if you have a broker's fee, they're going to sign the 159.
And I don't think, and if you have a check for the broker to receive, you will have no issue getting that signature.
Well, and it's a very precarious area, Bob. So say the bank wants to pay the broker's fee, but they take a closing cost that is equal to the broker's fee. Effectively, the small business borrower is paying that fee.
Chuck, we have a situation where several people have been complaining about getting IRS tax transcripts. What's the best practice on this, gentlemen?
First of all, hey, Chuck, give me a second. Bob, can you erase this? Because somebody from the IRS might see that I said the IRS has been a real pain.
There's a number of third-party lenders out there.
We're on the internet. It won't be there forever, Lance. Don't worry about it. Go ahead.
There's a number of third-party vendors out there that can help you with the transcripts, and you can get them in 5 days. But like Lance said before, it has to be meticulously filled out. You can't have presidents signing on LLCs or vice versa. The addresses for each year have to be correct. I mean, what are a couple of things you saw, Lance?
Well, and Chuck brought up 2 key ones. One of the most common ones, the little attestation box beside the signature. If they don't check that box, it'll get sent back. If they filed from a P.O. box in 17 and a street address in 18 and both are not reflected on the 4506T, it'll get returned. And Chuck mentioned probably the most significant area of returns. If you have the wrong title on the 4506T based on the type of it, whether it's an LLC, an S Corp, a C Corp, a proprietor, if you have the wrong title, it'll get bounced back for that. So one of the things that's critically important is to make sure as a good SBA participant lender, you review that form and make sure it's filled out correctly. Now, my best practice, Bob, I will complete the form for the borrower and send it to them for signature and review and signature. And we have fewer returns. Now, I'm not going to say, guys, I'm not 100%. I'll get, the other day, I had transposed when I was putting 12/31/2017. I put 12/31 1720. So I was a little dyslexic, and it did get returned.
You got returned, I assume.
Yeah.
Hey, what's going on with this? I was unaware of this also, Lance. What is Mike talking about rescoring loans when we're submitting them to SBA?
That's pretty interesting, because what Mike's saying is when you put the loan in E-Tran or SBA 1, you go get the E-Tran credit score, and then he submits it as a GP, and they come back and they've rescored the deal, and the score was lower. I was not aware, Bob, that they were doing that. There's no reason that they couldn't, because they may be running a current E-Tran credit score when the application hits. But I think the number differences that Mike shared were reasonably significant in my view. And unless I had an explanation, I'd want to know why the difference in the scoring. And there could be a good explanation. I was not aware of that. And Mike, thank you for bringing that up, because you could have a borderline. Chuck and I were talking about a loan. We looked at a credit memo the other day. And one of the concerns that I brought up to Chuck was I didn't really like the E-Tran credit score. And it was going to be submitted as a GP deal. I think that, making sure you check the E-Tran credit score, making sure you're satisfied with it, and, trying to stay away from that minimum E-Tran credit score is a good thing.
We push these industry events. Chuck, if someone has a sign up for America West, can they still show up, or are you going to kick them out?
We'll have them come in for sure. We'll make room. We'll make room. It's an educational summit. We want to make sure we educate.
Yeah, we have June 11th. It's Tuesday through Thursday. So just I don't know what we're doing there on the dates. And we got Detroit, Mashantucket, which I believe is out of Connecticut, and Music City, Flagel, NADCO. We don't have Nagel up here yet. We'll get Nagel on there as well. Let's see. And, summer quarters starting for all our underwriting closing classes. So take advantage of that. We'll start that the first week in July for your staff. And Lance, we just announced a new webinar on Wednesday, June 19th. What are you going to be talking about?
Well, the new SBA Form 1050, we're going to try to share with you best practices in getting that completed. We've already probably all seen the 1050, and many of us are already using it, but it does become effective and is required to be used starting July the 1st. So we're going to try to give you some best practices to understand how to use that form.
And part of that is we've said three things have to match: the underwriting, credit memo, the loan authorization, the disbursements. And Lance is going to go through to make sure that those three match, and what to do when we have changes, and how to protect your documentation. Yep. On Tuesday, June 18th, that's a free webinar. It used to be with SageWorks. Now it's Abrigio, and it's free. Now they're going to be pushing their loan dashboard, but if you'd like to know, Lance and I are going to be doing that along with Bob Judge. If you'd like to know what we're thinking about, this is for C-suite, board of directors. Tune in. It's on our website. It's free. You can do that. And then those are July 10th. We're going to have Brent Trulino talk about Paris scores from Okram perspective, and Lance is going to do his litigation compliance. So we got a lot of stuff going on, guys.
Good stuff.
Hey, we got a question for Christian. Lance, on a 7A, can one borrower pay the broker fee, or should it be the bank? I guess that's what Chris is trying to say.
Well, it really doesn't matter. It becomes more critical in making sure you have a completed, signed, and executed SBA Form 159. If a bank is paying a broker for a referral, that fee does not necessarily have to be reported. But if the borrower's paying it, or there is a perception that the borrower's paying it, then the form needs to be executed.
Well, I'm clarifying. No, if the bank pays the broker fee, it's got to be reported. We have to disclose that, correct?
Yeah, well, I'm sorry. A broker's fee has to be reported irregardless. But
right.
159's intent primarily is to report fees that the borrower has paid. The answer to your question, it really doesn't matter. You're going to have to do the 159 irregardless and get the broker's signature on it. So whether the bank pays it or the borrower.
Next week, live from
What are we
Rancho
doing?
Mirage. Chuck will be there. Lance, I don't think you'll be there, but you'll be on. You'll be over the internet. And
That's correct. I'll be here next Thursday.
We will clarify that you do not think the IRS is a pain. We'll.
I would appreciate that, Chuck and Bob. No audits in my future.
Yeah, we'll good luck with that. Hey, see y'all next week. Have a nice week.
Thank you.